Hello. Welcome back to the channel. If you've been following my investing journey, you know I am on a mission to grow my portfolio steadily through smart, consistent investing. And today I'm giving you an update on one of my favorite ETFs, SCHG, the Schwab U.S. Large Cap Growth ETF, and why I believe it deserves a place in every investor's portfolio. But before we dive in, remember, this is not a financial advice. I am just sharing what I am personally doing and what's been working for me. Okay, so here is where I stand right now. I currently own 70 shares of SCHG. I recently added 3 more shares to my position, taking me up from 67 shares, right? And my average cost basis is $28.36, as you can see over here. And I started this position. Let's go over here, and you can see I started this position back in January 14 2025, right? And I have been dollar cost averaging into this every single month ever since, except for the month of May. As you can see, January I was buying here, right? And February I was buying, okay? And March, April I was buying, um and I was also buying, let me see, in except for May, when I was not able to buy because life happened and I just didn't have the extra cash that month. But honestly, that's okay, because the key isn't perfection, it's consistency. There have been times I could only afford um, half a share. As you see down here, I was able to only buy zero point 0.6 share of this, and sometimes I was able to buy a whole share. Sometimes I was able to buy, let me see, 3 shares somewhere. Let me find it. All right, um 3 shares. Okay. um it didn't matter how small the amount was. What mattered was showing up and staying in the game. Okay, now let's talk about why SCHG is such a powerful ETF. First, SCHG tracks some of the fastest growing large cap companies in the US. Think of names like Apple, Microsoft, Amazon, Nvidia, and Meta. These are the giants driving innovation, shaping the digital economy, and leading the next wave of technology growth. But what really makes SCHG special is its simplicity and cost efficiency. It has a super low expense ratio of just 0.04%, which means you are keeping almost all your returns. Over time, that low cost makes a massive difference compared to other high fee funds. Okay, and because it's growth focused ETF, you get exposure to companies that are reinvesting profits, expanding fast, and compounding at incredible rates. SCHG basically gives you a basket of America's most innovative and high performing companies all in one place. So I want to show you this chart over here so you can see the returns of SCHG over time. Okay, year to date it has returned 12, almost, let's just say 13%. And then a year ago, 23%. In the last 3 years, it's averaged 32.37%. In the last 5 years, it's averaged 17%. And in the last 10 years, it's averaged 18.58% per year. That's like huge returns, right? Over 10 years, 18%, being able to get that. That is super impressive. Okay, but what really makes this special is the company they invest in. Okay, and if you believe in a long-term innovation, right? If you believe in technology and growth, SCHG is built for that vision. Okay, for me, SCHG represents more than just ETF. It's a reminder that building wealth isn't about timing the market, it's about time in the market. I missed May, and guess what? That did not matter because I was back at it in June, July, and every month after that. The point is consistency. Consistency compounds. Okay, whether you are investing $10, $100, or $1,000, the habit of staying consistent is what separates successful investors from emotional traders. So if you are building your portfolio and looking for a strong long-term growth ETF, take a good look at SCHG. If you found this video helpful, hit the like button, subscribe if you haven't already, and drop a comment below. Let me know what ETFs you are buying this year. Thanks for watching. Stay consistent. And remember, this is not a financial advice, just one investor sharing his journey.